Hold on. Yeah, now it has started.
It is now.
Yeah. Now, taxation of non-residents in Nigeria, right? Just like I said, last week we talked about one of the challenges we have in taxing digital economy, and which is the fact that they don't have a permanent establishment, that is a physical presence in Nigeria, right? So that's it. Now, a person can be a resident in Nigeria, and it can be a non-resident, and sometimes you have dual residency. Okay, so a resident person is a person that is living in Nigeria or that is earning money in Nigeria. Okay, and is accessible to tax on a global scale. That is, your income is liable to tax. Your income, your profit is liable to tax, whether they are accrued in Nigeria or they are brought into Nigeria or they are received in Nigeria. All right. So that's it. Now, this residency, when we say a resident company is a company that is registered in Nigeria, while a non-resident company is a company that is not registered in Nigeria. All right. Now, we have chargeable tax to resident individuals. Now, before we can say you are a resident in Nigeria, number one, you are domiciled in Nigeria. You are living in Nigeria. Number two, you are not living in Nigeria, but you spent up to more than 6 months. You spent 6 months and 1 day. 365 days is a year, right? Am I right?
Yes.
Okay. So 365 days in a year. Now, half of it will be what? Half of it will be 362.5. I mean, 182.5, Abby.
183.
So 182.5, which means anything above that 182.5 is 183, right? So anyone who spends 183 days in Nigeria will be subject to tax in Nigeria. Are we together, please?
Yes,
Yes.
sir.
Yes, sir.
Aha. Now, 183 days, you are not living in Nigeria, but in a particular 12 calendar month, you spent 183 days in Nigeria. Then also, if it is not either of any of those two, then probably you serve as a diplomat or a diplomatic agent in Nigeria. Are we together? Hmm?
Yes.
Yes.
Aha.
A diploma.
So that's it. So when you are any of these three, then you are a resident in Nigeria. Okay? Now, resident individuals and the tax they are liable to. Any profit, trade, profession, vocation that is carried out by you as an individual who is a resident. I've explained what residence is. Who is a resident in Nigeria will be taxable in Nigeria, right? Will be taxable in Nigeria. Now, employment income is taxable based on individual's residence or the source of the income. Okay? So if it is employment income, it is based on where you are. For those who are in Lagos, now you agree with me that those people who are living, I hope you are still together.
Yes.
Okay. So those people who are living in Agege, Ijushaga, then this Idiroko side, those people they share border with other states. In fact, one of them share border with another country. Idiroko people, they share border with those people in another country, right? Now, those in Agege, they share border with Ogun State. It is possible you are living in Ogun State. For instance, if you are living in Okoba, I mean, and what was it called? All this after Songo. The whole of Songo now is Ogun State. But Agege is Lagos State. From Abulegba is Lagos State. Now, you are living in Songo. You are working at Abulegba. Where are you paying your tax to? Are you paying your tax to Songo, which is the Ogun State government, or you are paying it to Lagos State government where you work? Abulegba where you work. That's one. For those who are in what should I call it? Shagamu, right? You are also just jostling. I mean, yes, you are jostling between Lagos and Shagamu, or all these what do we call it? Mowe Bafo. All those places are Ogun State too. Ijushaga is Ogun State. Ajuwon is Ogun State, right? Bega. Now you're working at Oshodi or Isolo. You are living in Shagamu, Mowe Bafo. Are you paying your tax to Lagos State or Ogun State? Because that's Lagos State and Ogun State problem now. The same thing for those who are in Abuja. You are living in Abuja. You are living in Maraba. You are working in Yanya. Are you paying your tax to Nasarawa State government or paying to FCT IRS? Those in Suleja, they are from Niger State and they work in Abuja here. Where are you paying your tax to? Do you understand? So all these things. Now, where do you pay your tax to as an individual? Employment tax is taxable on the individual's residence or the source of income. Now, where the individual residence is different from the source of income, then the source of income is the primary place where you are earning that money. So if you are living in Ogun State and you are working in Lagos State, your tax will be paid to Lagos State government. Now your Ogun State government, what's his name? What's the name of that Ogun State governor? What's his
Dapo
Mr. Dapo. Mr. Dapo. Or Mr. Abe. Mr. Abe is the one who knows why he did not give you work that will make you stay in Ogun State. I'm just kidding, Sha. Yeah. Ogun State is a very beautiful place and they have lots of things as well. Yes, they have lots of things. I'm just kidding. Now, so if you are working in Abuja, but you are living in Nasarawa, that place you are working, that place you are earning your income, that place you get your source of income is your taxable place. That's the government you are paying to, right? But if it is the same place, that means your residence is also where you work. For instance, you are living in Agege, you're working at Oshodi, right? So that one is what? The same thing. So yes, your residence. That person who is raising his hand should go ahead. Go ahead, please.
Okay, thank you very much, sir. Please, can you hear me, sir?
Yes, we can hear you. Go ahead, sir.
Hey, like what you said now, that where you earn that income is where you pay your tax. For example, I work in Lagos State and I live in Abeokuta, so my tax will be paid to Lagos State. But before, I don't know whether it has changed though. Where you resident is where you pay your tax now. Our payee, somebody that's living in Ogun State, we pay his payee to Ogun State, but he work in Lagos State. Has it changed? That's my question.
So it hasn't changed. It is you that is applying it wrongly. Do you get it, sir? It has not
I'm with you, sir.
changed.
Can hear you,
It
sir.
has not changed. You are the one applying it wrongly. So let me give you another instance. Right? I work in Abuja and we have staff who work from Lagos. Where are they supposed to be paying their tax to? Abuja, right? According to what I said, Abuja, right? But what if I have a business premises in Lagos? Do you understand? What if I have a business premises in Lagos? Right? So if I have a business premises in Lagos, they can pay their taxes to the Lagos state government, even though the head office is in Abuja. Do you understand that? So right from time, yes, people have always treated it wrongly. So yes, you just confirmed it that people have been treating it wrongly. So don't let government hear it from you. Now let me give you one very popular instance. I don't know if you are aware. There was a time they were fighting on who should collect tax from Lautech. Is anyone aware? When
Yes.
Oyo State and what's it called, Sef? And Osun State government, they are fighting over who should collect. I mean, who should receive what's it called? Who should receive taxes from Lautech? Are you aware?
Yes, sir.
Aha. At the end of the day, who won that case and why?
Lautech, Lautech.
Who won it? Who won the case? Was it Oyo State or
Oyo State.
are you sure it was
Oh,
Oyo State?
it's Osun State, the Osun State. It's not your
Osun
state,
State
it's
won
Osun
it.
State.
Why?
The reason why Osun State won is when they check the boundary between Osun State and where the Lautech actually build theirs is after the boundary of Oyo State is not within. That is why.
So that's because it is located in Osun State. All right. So that's it. Now, when you where you are working, where you are earning your income, yes, please go ahead. We'll not move forward though.
Sorry, I just want to make one clarification. Are you saying that like banks now, where they have their head office in Lagos and they have branches across the states? So each state, let's say a branch located in Kwara State, will remit their taxes to KWRS, while taxes in Lagos will remit their tax to LIRS.
Yes. So this is it. The branch in Kwara State, branch is the one in Kwara State, I mean.
Yes, yes.
Now, if you are to register your payee for this payee of your staff, you will register to Kwara State government. For instance, now people working in Kwara State, do you expect them to go and open an account with Lagos State government?
No.
Aha, so that's it.
Okay, sir. Thank you.
Aha, so that's it. Now let's move on. Non-resident individuals who are not domiciled in Nigeria, right? they are not they did not spend up to 183 days in Nigeria, but they earn income or profit from Nigeria. Now, they become liable to tax when they start a business or profession in Nigeria, even though they don't stay in Nigeria, they are not living in Nigeria. But once they start a business in Nigeria, they become liable. And look at it, employment income from Nigerian sources is also taxed. So even if you are not living in Nigeria, you not stay up to 6 months in Nigeria. If you have an employment income in Nigeria, you will be taxed. For instance, you are living in the UK, but you are working remotely from the UK, and the company is registered in Nigeria. That company will deduct your money for payee. You are not resident, oh. The company will deduct your money, except if you are a what do they call these people? Expatriate. If you are an expatriate, which of course there is another rule entirely guiding those ones. Do you understand? So that's it. Now, resident and non-resident companies I told you a resident company is registered in Nigeria with CAC, right? Now, previously, residency was determined by place of management, where management is, that is, the corporate head office, where management is. But now it is based on incorporation, which can lead to dual residency, which means you can be registered in Nigeria and also be registered in the UK. All right. Now, a non-resident is not registered in Nigeria, is not incorporated, but they derive income from Nigeria. Such companies are liable to pay tax under Nigeria's CITA, Company Income Tax Act, even if exempted from incorporation. You're not registered in Nigeria, but you derive your income from Nigeria. You will pay tax. Do you understand? You will pay a tax in Nigeria. So that is it. Now, circumstances in which non-resident companies are liable to tax, not just any tax, so not everybody, but circumstances that will make you pay tax is if you derive that income through a permanent establishment. That is, you have a physical office in Nigeria. You are not registered in Nigeria, right? But you have a building in Nigeria. Who can think of one company like that? That is not registered in Nigeria, but they have a building in Nigeria.
Deloitte.
Deloitte, okay. Are you sure Deloitte is not registered in Nigeria, Sha? Deloitte is registered in Nigeria. Deloitte is registered in Nigeria.
Google, Microsoft.
ShopRite.
Do you have Microsoft Office in Nigeria?
Jumia.
Yes, it's not. Yes.
ShopRite is on
Yes,
franchise. So all
yes.
the
There is
ShopRites you see in
Microsoft. There
Nigeria
is
are
Microsoft
registered in
office
Nigeria.
in Nigeria. Is in
Jumia.
Ikoyi. I know their
Okay, there's
office. Microsoft office.
uh-huh, no, in Lagos we see those things now. If you're in Lagos, you will see those things. So Microsoft has an office in Nigeria, even though Microsoft is not resident in Nigeria. So Microsoft like that, insofar they have a permanent establishment. There is something that there are attributes. Not every building is a permanent establishment, though. And I'll tell you why that office, that Microsoft office, might not be a permanent establishment. So when I bring it out, you now tell me, you be the one to answer because I don't know how their operation is or what they do there. You be the one to tell us. So stay tuned. Now, if they have a permanent establishment, an office in Nigeria, then yes, they will pay tax in Nigeria. If they have an agent who is dependent on them, an agent who is dependent on Microsoft, an agent who is dependent on Jumia, right? If we have it, then they will pay tax. If they have supervisory activities, they supervise a project, you will pay tax. If it is a turnkey project, what's a turnkey project? Anyone? A one-off project. A project that you just took the project, executed the project, and then disappear, you go back. That one-off project, you will pay tax on it. If they provide financial service, just like Deloitte, right? You pay tax. If you have certain investment income, such as dividends, that is, you buy shares in a company registered in Nigeria, you pay tax. Interest, you gave a loan to a company registered in Nigeria, you pay tax. Royalty, royalty is like rent as well, right? Yeah, you pay tax. So that is what will make you pay tax, right? Now, what is that permanent establishment? Permanent establishment is a building, right? But what will not form permanent establishment is if that building you see there is that people only go there to get information, to obtain information about Microsoft. One, or people go there for window shopping, whereby they display their goods there. For instance, Kucharis, those people who are selling cars, They are not registered in Nigeria, but they have a warehouse whereby they keep their products, a warehouse, right? Where they store their products or where they display their products. If that place is meant for a display of products or a warehouse whereby they just keep their products, then that is not a permanent establishment. So the Microsoft, please, is it any of those three? Is it where people just go there for information, or there is corporate activities going on there? Is it a corporate? Is it an head office where they have staff, they have employees? Which one is it? Please help us out. Tell us, sir.
Have employees, they have staff. Because
Okay,
the
so
reason why I've been there before, you understand? When we have
mm,
issue with kind of software, we want to buy software or what we bought in from outside the country. So we now need the key. So we can go to their office. We normally go to their office. Is in
okay,
before we get to Palomo beside the NOPC. That's one they have a tall building there, Microsoft. They have an office there.
okay,
So we go there to get information and they have staff, they attend to us.
okay. Now, if that is the case, it is a permanent establishment. All right. So that is a permanent establishment. Those things will make you pay tax in Nigeria. Now, dual residence. When you have a dual residence, it means that you have different places. You are resident in Nigeria and other place. Now, where you have dual or multiple residencies, right? There will be a place called a principal place of residence. Are we together, please? There will be a place called the principal place of residence. All right. So that is where you stay mostly. For instance, in any particular, well, there are rules, sha. No worry, don't let me rush it because when we get there, we'll still repeat it. So for a company, all companies in Nigeria are subject to federal jurisdiction. Okay. They are subject to federal jurisdiction. That is, all of them are under FIRS, regardless of where you are in Nigeria. All right. So if it is Lagos, Abuja, Osun State, Abia, Anambra, Delta, Edo, anywhere, then Kano, Katsina, and anywhere, yes, you are under FIRS. Right. So the issue of dual residency does not arise. The issue of dual residency is for your staff. Just like I said, one is working in Lagos and living in Ogun State. All right. So that's it. Now, international dual residence. For international dual residence, we have differences in residency definition across countries. And this can lead to dual residencies for individuals and companies. Now, Nigerian tax treaties typically resolve the issues of international dual residency, with the place of incorporation often used as the determining factor. Your place of incorporation, there are some companies that are registered in two, three, many places. Right? So that's it. So now there is always something called what do we call it? Treaties, tax treaties, whereby we have an arrangement. Nigeria just signed one treaty. Am I right? Nigeria just signed one treaty with a country yesterday. Which country is that?
Uh,
Turkey.
I saw
Turkey.
it online. Turkey, yes,
Oh,
Turkey,
yeah,
yes.
Turkey. So Turkey, yes, Nigeria just signed it. Now that's a treaty, right? Whereby the essence of the treaty is to ensure free flow of individuals and goods, right? That is, you can sell across border, you can sell and all of that. Then people can freely walk from Nigeria or work in Turkey or any other state like that. So that's it. That's in the international treaty. Now we have branches and a parent company. When we have a branch and a parent company, okay? Now, for the branch, branches of foreign companies in Nigeria, we have the branch in Nigeria. That branch will be treated like a separate entity of its own. We will treat you as if you are in Nigeria. You are registered in Nigeria, even though you are just a branch, right? Now, you are a branch in Nigeria. So we'll treat you like a company registered in Nigeria. In fact, you have to be registered in Nigeria. So that's how we treat it. We treat you like a separate legal entity. Now, the parent company's foreign control does not affect the subsidiary. If you like, pay everything to your company, right? If you like, don't pay everything. Our own is that your income earned in Nigeria will be also be taxed in Nigeria. Your profit in Nigeria will be taxed in Nigeria. Are we there? Are we there, please?
Yes, sir.
Yes.
Ah, Nigeria tax in Nigeria. Now, they may only be exempted from tax if used solely for storage or information collection, right? So that's it. Yes, go ahead, sir.
Okay, good evening, sir.
Yes, sir.
I'm a lady.
Uh, Good evening, man. Go ahead.
Okay, this parents and subsidiary, let's say like DHL that they are using for this delivery stuff, like from Nigeria to abroad and all, would they pay tax in Nigeria too?
I didn't get that.
I mean DHL company that they use for deliveries in and out of
Uh,
Nigeria. Would you also
uh,
pay tax in Nigeria?
do they pay tax in Nigeria?
Yes.
Okay. Is it a subsidiary company?
No. It's not the
So what is
subsidiary
DHL?
company.
So what is DHL?
I
What?
think
Where would you categorize DHL?
I think it's a company on its own.
Is it registered in Nigeria?
I don't know.
So now DHL is registered in Nigeria. Yeah, I think DHL is registered in Nigeria. DHL has been in Nigeria for before I was born. What am I even saying? Before 19, I can't even remember. But DHL has been long now. For those of us who can check. So that's it, yeah. Right? We are talking of a parent and a subsidiary company now. Now, a parent and a subsidiary company, before you can be a parent and a subsidiary company, definitely it has to be a registered parent known as subsidiary company as well. Right? So this one will be a parent, this one will be a subsidiary. Now, we can look for that parent company that has subsidiaries in Nigeria. Do you get? Eh? We can look for a subsidiary company, I mean a parent company that has a subsidiary in Nigeria. Yes, we can look for it. Do you need anyone?
How about Nestle?
Nestle. Who knows about Nestle?
I think they have, I don't know if it's their head office at Switzerland.
Okay,
So, but I don't know if, I'm not too sure if it's their parent company. And I also know they have their head office at Ilukbeju. So I
okay.
don't know if the
Yes,
one in
I think
Switzerland is the parents.
yes. So for Nestle, parent company is in Switzerland and they have their subsidiary in Nigeria. We have so many like that too. For instance, Unilever is in the UK and they have a subsidiary in Nigeria.
Don't they pay
MTN is
tax?
not a Nigerian company. Sorry. What do you say? Okay, I thought the person was something else.
I know what of pay
MTN
tax, pay
is
tax.
is Paystack, where is their parent company? Do you know where their parent company is? Eh? So Paystack is in US and they have a subsidiary in Nigeria as well. Are we together, please?
Yes, sir.
Aha, so we have them like that. Total Energy also. Total Energy is in France and they have a subsidiary in Nigeria. All right. So that's it for parent company. And now all these companies that have subsidiaries in Nigeria, we treat them as if they are separate entities in Nigeria. All right. Aha, so that's it. Now, subsidiaries and the parent company is what we are doing, right? Now, dual residence issues are resolved using double taxation agreement. Dual residence issues are resolved with double taxation if you have dual residency. So the treaty between Nigeria and that country where that is your second residency, right? Or your second residence is, if Nigeria has a treaty with that country, then that treaty is what will take care of your tax liability. It is what will determine your tax liability in between those two countries. And that's that. Now, we have comparison of overseas branches and subsidiaries. Now, there's a difference between overseas branches and subsidiary. An overseas branch of a Nigerian company, that is, you are registered in Nigeria, but you have a branch in overseas, right? A company like that is taxed in Nigeria, right? You are resident in Nigeria, but you have a branch abroad. Now, foreign taxes paid can be deducted. So if abroad, let's say Nigerian company that has a branch abroad, which one? A branch, oh, not a subsidiary. Which one? Or are you saying Nigeria does not have a company that has a branch abroad?
All
Do we
these
have any?
banks now, banks,
John
Access
Vance.
Bank,
Is Access Bank a Nigerian
John
bank?
Vance.
Sorry, madam, what are you saying?
Yeah, I mentioned John Vance.
Which one is John Vance?
Ah,
What
Mo
did they
John
do?
Vance.
I don't know it. Oh. What did they do? Who is John Vance?
It's a cocoa company.
Okay, so it
we
is
have Access
registered in
Bank in
Nigeria
Ghana
and they have a branch
and
abroad.
other African
Sorry?
countries.
They have a branch at Canada.
Okay. So for a bank, at least we know Zenith Bank, Jim Ovie, Abi. Aha. So we have First Bank too.
We have
We have
Dangote too.
Dangote, thank you, Dangote Cement, right? Now, a company like that, the tax they pay in in their foreign land, the tax that the branch pays, whatever tax, let's say that branch made a profit of $10 million and they are supposed to pay 30% of it in Nigeria. Abi, am I right? Am I right?
Yes, sir.
Is that not company income tax? 30%.
Yes, sir.
So if they are paying 30%, right? So if they are paying 30%, now let's say 30% of 10 million is how much?
Maybe like 300K.
If we got punish devil. 30% of 10 million. Someone else should try, please.
3 million.
3 million.
Thank you. 3 million or 300K, right? Now, they are supposed to pay $3 million. Let's say in the country where they are operating, they already paid $1 million as tax, and they're supposed to pay $3 million in Nigeria. That $1 million will be deducted from the $3 million they are to pay in Nigeria, and then they will pay the net amount, which is $2 million, to Nigerian government. Do you understand?
Yes, sir.
Do we understand? Do we understand, please?
Yes, sir.
Yes, sir, we
That's
do.
what we have there. So that tax they paid, it will be deducted, and losses from the branch can also offset the gain in Nigeria, the profit in Nigeria. So if the US company made a loss, right, and of course the Nigerian company made profit, they will deduct that loss. They will relieve that loss from the Nigerian profit before Nigeria subjects the remaining amount to tax. All right,
Yes, sir.
right. That's it. Now, of course, there is always a double taxation relief available as well. Now, overseas subsidiary, you are registered in Nigeria, but you have a subsidiary abroad. You see that subsidiary, you cannot tax them in Nigeria because it is not registered in Nigeria. It is registered in that country, right? But if it is a branch is registered in one place, which is their principal place, head office, which is in Nigeria in this case. Okay. Aha. So you registered in Nigeria, you have a branch abroad. That branch abroad is still bearing Nigerian name. That's why you subject it to tax in Nigeria. But a subsidiary means you have registered another branch abroad, right? So that subsidiary will not be taxed in Nigeria. All right. Are we together, please?
Yes.
Aha.
Yes.
So that's what we have there. Now, losses, yeah. So only dividends received from the subsidiary are subject to Nigerian tax, right? What do you mean by the dividend? Now, if you have a subsidiary abroad, it means when they are done with their account, we'll consolidate it in Nigeria. Abi, the parent company will consolidate it in Nigeria. Am I right?
Yes.
So your
Yes, sir.
consolidation in Nigeria means you as a parent company, you have a share of profit, right? You as a parent company have a share of profit. So that is it. Now, and that's what that will be subject to tax. That share of profit, that your own share is what will be subjected to tax. That share can also be called a dividend, and that is what will be subject to tax. All right. So that is it. Now, losses from an overseas subsidiary cannot be deducted in Nigeria due to lack of group taxation provision. Since we cannot subject you to tax, since we can't charge you tax from the profits of from the since we can't subject that profit from subsidiary to tax, definitely when that subsidiary makes a loss, you cannot relieve it from the parent. Do you understand? Eh?
Yes, sir.
Aha. You cannot deduct it, right? Aha. Any question? Okay, so I'll move on. Now, treatment of expenses. Now, there is no discrimination in the allowance of expenses for tax purpose between resident and non-resident, right? So expenses, allowable expenses are still the same. Disallowable expenses are the same. All right? Aha. Now, profits or income that is deemed to be derived from Nigeria. So for us to determine the profit that is derived from Nigeria, eh, it depends on whether you have a fixed base. A fixed base is a permanent establishment, or you are operating through through a dependent agent. I don't know why I keep forgetting this example. Example is DSTV. Does DSTV have a branch? A an office in Nigeria?
Yes.
Yes.
They have,
Yes, sir.
Aha. So that is it. So that's it, right? So now, when they have a dependent agent, even if DSCB does not have an office in Nigeria, they have agents that are dependent on them. Or if they are executing a turnkey project in Nigeria. All right. So that's it. Now, we have Finance Act of 2019 on non-resident companies, right? So the changes there is that withholding tax on technical management and consultancy fees earned by non-resident companies is the final tax. Do you understand? It becomes a final tax. They are withholding tax. All right. Then also profits from online or electronic commercial activities, which is digital economy now, right? They are taxable if they have significant economic presence in Nigeria. And how do you know if they have significant economic presence? If they disappear for 30 seconds, the whole world will shake. That means they have significant economic presence. An example is Facebook. I mean, Facebook, WhatsApp. All right. So that's it. Then also, non-resident companies are required to file corporate tax returns with NRS, Nigeria Revenue Service, right? So that is what we have. They are required to file a non-tax, I mean, a corporate tax returns with NRS. Are we together, please?
Yes, sir.
Yes, yes.
Now, we go into double taxation. Even if we can't complete this double taxation today, we should be able to complete it actually. Let's see if we can complete double taxation today. Now, double taxation is an agreement. Double taxation arrangement is an arrangement or an agreement between two countries to avoid imposing tax on the income of that company, the same income of that company from two different sources. So I have a company in Nigeria, the same company is in Ghana, and then I'm subjecting it to tax. Do you understand now? So now, because we don't want to be paying two different taxes on the same income, then we have double taxation arrangement, which we mentioned earlier that if you have a company abroad, right, a subsidiary, all right, so that's it. Now, these agreements are essential for ensuring that taxpayers are not unfairly taxed twice on the same income, and of course, to foster cross-border economic activities. All right, so that's it. Now, the key point here is that we have a tax treaty. A treaty is an agreement, a formal agreement between two countries to resolve double taxation issues relating to income, capital, assets, and wealth. All right. So for a treaty to be binding in Nigeria, it must be signed by the tax authority in Nigeria, which is NRS, and approved by Federal Executive Council, Tinubu and his cabinet, and also ratified by the two chambers of the National Assembly, the House of Representatives and the House of Senate. Right? So that's what we have there. Now, Section 44 addresses cases where there is no specific double taxation arrangement in place. While Section 45 and 46 handles cases where there is an arrangement. All right? So that's it. Now, Commonwealth Income Tax Relief. This one is a unilateral relief. That is, it is granted by Commonwealth where there is no double taxation arrangement. And it applies to Nigerian companies that are paying taxes in any Commonwealth country. Any Commonwealth country. So what are Commonwealth countries? Anyone? Hello, anyone? Are we there? Okay. So the Commonwealth countries, we have them in Nigeria. I mean, in Africa generally. And in Africa, we have Nigeria, we have Ghana, Kenya, South Africa, and the rest of them. Right? We have in other countries as well. We have in Europe. Yes, UK is part of it. UK, Cyprus is there.
Tanzania.
And also we have, sorry, what do you say? What do you say?
She just responded to are we here?
Okay. Now, so we have them like that. All the Commonwealth countries, right? Where there is no double taxation arrangement. All right. Aha. So Nigerian company that is paying tax to them, will do what? They'll have this arrangement. They'll go by the Commonwealth unilateral relief. Okay, that's it. Now, if a Nigerian company has paid taxes in both Nigeria and Commonwealth country on the same income, relief is available to reduce that tax burden in Nigeria. If you have paid tax, let's say you're working in the UK, you have a business in the UK, and they have taxed you in the UK, Nigeria will pay you back the money. You will get the money back from NRS. All right. Now, the amount of relief depends on the tax rate in both countries. All right. Uh-huh. Uh-huh. So that's it. Now, if the Commonwealth rate is lower than half of Nigerian tax rate, what is Nigerian tax rate?
30%.
What is the half?
30%.
15.
15%.
So if the Commonwealth rate is less than 15%, that means Commonwealth rate will be used to give you that relief, right? Commonwealth rate that is lower will be given to you. But if half of Nigerian tax rate is lower, then the relief is capped at half of Nigerian tax rate. All right. So that's it. Shall we proceed?
Yes, we can.
Yes.
Yes, sir.
Aha.
Yes, sir.
Now, double taxation arrangement is more specific and it provides relief based on the agreed terms between the countries, right? So double taxation established withholding tax rates, which are typically reduced for countries with a double taxation arrangement compared to those without a double taxation arrangement. All right. Are we together?
Yes, sir.
So, yeah, for instance, now, if you have, if you receive dividend in the UK, you are in Nigeria and you receive dividend in the UK, Nigerian tax rates, Nigerian withholding tax rates on dividend is how much?
10%, Abi.
10%.
10%. Now, 10%.
4%.
Let's say the UK is using another 10%. You cannot pay that 10%. Nigeria and UK, we have an arrangement, and the maximum you pay altogether for both Nigeria and UK is 15%. If they like, Nigeria should take 10, UK take 5. If they like, Nigeria should take 2, UK should take 13. But from your own money, you will not be deducted for more than 15%. That's because there is an arrangement between them. All right. So that's it. Now, the benefit of DTA is that it helps in avoiding double taxation, it encourages economic cooperation between the countries, and it prevents tax evasion. You can't run away from tax because if you don't pay in Nigeria, you pay in another country, right? And of course, it helps to reduce compliance costs for business, compliance to tax tax payment. Yeah, it reduces the cost. All right. Do we have any question? Now, there's something called a taxing right. Taxing right is who has the right to tax you, right? Who has the right to tax you? Which country has the right? So DTA will clarify that taxing right of each contracting state, all right, and outline dispute resolution mechanism for conflicts that may arise, all right. So that's it. Now, we also have multilateral treaties. Those are everything we've been saying before is unilateral, right? Your Commonwealth is a unilateral treaty, all right. So that's it. Now, for unilateral, unlike bilateral, we have bilateral, we have unilateral, we have multilateral. Multilateral involves multiple countries. Bilateral involves two countries. All right. Unilateral is Nigeria against other countries, which is like Commonwealth, right? Aha. So that's it. Now, we have something called OECD multilateral instrument. I mentioned OECD before. Organization for Economic, Corporate and Development, right? Now they have a multilateral instrument that addresses issues like base erosion and profit shifting. Is one of the next topics we are going to. All right, and that one is when they modify the bilateral treaties. Now we have the impact on withholding tax, right? So for double taxation arrangements, the impact on withholding tax rates is on dividend interest and royalties, right? Now, for countries with a DTA with Nigeria, the net withholding tax rate is typically reduced to 7.5%, whereas without a DTA, they face 10%, a standard rate of 10%. But if you have a DTA with another country, it will be 7.5. So 7.5 in Nigeria, 7.5 in the other country, and that makes a total of 15%, right? Now, countries with active DTAs with Nigeria, countries that have arrangement, double taxation arrangement with Nigeria, right? We have UK, Canada, South Africa, France, Netherlands, China, and many of them, some others like that. All right. So that's it. Now, resolution of conflicts. When there is a conflict between Nigeria and other country, or when a taxpayer has a dispute, so what happens? So the resolution is if taxation is not in line with DTA, companies or individuals can seek relief through a competent court. Okay. Now, competent courts of the contracting states involved, that is the two countries. All right. So that's it. Now you go to court, sue the two of them to court, let them come and explain themselves. They will sort it out. Now the DTA that one is for a competent court, right? Now DTA provide mechanisms to resolve disputes. But if there is no DTA, definitely you go to court, right? Now we talked about permanent establishment before. Abi, we talked about permanent establishments before.
Yes, sir.
Yes.
Now, permanent establishment, like I said, is a fixed place, a business where foreign enterprises partly or wholly carry on their business in Nigeria. All right. Before it can become a fixed place, it must be a factory.
Mr.
If
Larewaju, please mute your mic.
okay, before it can be called a fixed base or a permanent establishment, number one, it must be like a factory, right? Or an office, a branch, a mine, or an oil well. Nigeria has reduced their legislation on oil now, and they now issue out they lease out 50 oil wells, additional 50 oil wells, right? Just this week, sha. Then also for it to be called a permanent establishment, Activities like construction, installation, or assembly is going on there. That is, it can be a company, let's say a construction company or a car company. If they are assembling the car in Nigeria, then it is a permanent establishment. If they provide services relating to activities I've mentioned above, it is also what? A permanent establishment, right? That's it. Now, what is not a permanent establishment? I've explained this before. Facilities that is for storage or information collection, right? I've mentioned that before. Now, for individuals conducting business through a permanent establishment, profit attributed to that fixed days or through the agent or related parties will be taxed. Are we there?
Yes.
Yes.
uh So that's it. Now, taxation of business profits and income from immovable property. Yes, you have a property that is not moving, immovable property like land and building. All right. Aha. Now, like land and building now, income from immovable property in one contracting state by a resident of another. You are living in Nigeria, but you have an immovable property in the UK. That property may be taxed in the state where the property is located. UK government will tax you to the end. All right, that's it. Now, the term immovable includes, it can be agricultural equipment, it can be mineral rights, it can be forestry, but ships and aircraft are not immovable properties. Eh? That's it. Now, income from property use, leasing, or any form of exploitation is taxable in the country where the property resides. That's it. Now, taxation of investment income. I believe you are familiar with this before. For investment income, what are investment income? What are the investment incomes we have? They are just three: dividend, interest, and rent, right? Royalty can fall under rent. Are we together?
Yes.
Yes, sir.
Aha. So now, for dividend, dividend paid by a company in one contracting state to a resident in another. That is, contracting state is the state where the business is coming from, the dividend is coming from. Your residence is where you live, Abby. Now, that dividend may be taxed in both states, but capped at 12.5. Yes, it is 12.5. For companies with a substantial shareholding of 10% or more. But if your shareholding is more than 10%, if your shareholding is less than 10%, then your dividend is 15% capped, right? Your dividend will be 15%. All right. Are we there? Now,
Yes, sir.
so if you have a dividend, if you are receiving dividend from the UK company, and you have up to 10%, then your dividend will be 12.5%. Your withholding tax will be 12.5% from both Nigeria and that UK. But if it is less than 10%, then your dividend will be 15%. Now, we have special provision that applies to cases involving permanent establishment or independent services that are tied to dividend payments. For interest income is taxable in both the state as well. Both the states where the interest is coming from, right? And where you are resident. All right? Aha. That's it. Now, it is also capped at 12.5%. Now, the interest that is exempted from tax is, of course, government owned interest. Uh interest you receive from government investment. Aha, that's it. Now, we have also interest paid between related parties or through special relationship must reflect the market rate. All right. So that's it. Now, dispute resolution mechanism that we have double taxation treaties, right? Which we say that They are signed to mitigate double taxation across borders. Yes. So those are the ways to resolve disputes among countries, right? And under this double taxation treaty, we have two. We have mutual agreement procedure, which is MAP, and that is the negotiation between two states tax authority, NRS, and the UK tax authority, right? Aha. To resolve the disputes that has been initiated by the taxpayer. Taxpayer will be the one to initiate it. So mutual agreement procedure is there. So Nigerian Revenue Service and the United States Revenue Service, two of them will meet and resolve the issue. We can also have arbitration if MAP fails. Arbitration is one of the alternative dispute resolution we have in the world, right? So if MAP fails after 2 years, arbitration can be initiated. And this one is only available if the competent authority has already started a MAP without resolution, right? So that's it, right? So that's it. Do we have any question? Any question from anyone? In the absence of question, I'll see you all in our next class. Good night, everyone.
All right. Thank you, sir.
Thank
Good
you,
night,
sir.
sir.
Good night, sir.
Thank you.
Yeah. Good night, everyone.
Good night.